Good afternoon, everyone. Thanks for joining us today. We have an update with Talisker Resources. With me, I have Terry Harbort, CEO, and Matt Philgate, VP Corp Dev. Before we get started, as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. And this whole session will be a Q&A, so feel free to enter any of your questions in the Q&A box. And for those of you that are newer to Talisker, feel free to check out some of the other webinars on our YouTube channel or on their social media feeds to get a broader understanding of the story, because this really is going to be an update. With that out of the way, I'd like to introduce Terry and Matt. Hi, guys. Nice to see you.
Hey, nice to see you as well.
Hi, Deborah. Thanks very much.
Yeah, maybe we can kick off. Maybe you can just talk a little bit about the recent news that you put out and give us a little bit of an update there.
Yeah, look, there's really some of our final results coming in, holding good high grades, good intercept widths, sort of what we've come to expect from Bralorne. Interesting, these zones sat in what we call the BP gap, or the historic ownership gap that sat between the old mines of Bralorne and Pioneer. It's a very interesting zone. One of the last zones that we decided to drill. Initially, when we started drilling, we went for low risk areas. So these areas that were pretty close to the historic mines. And then we looked along strike from the historic mines. And really, this gap area it's almost like a brand new deposit. It sits in between those two historic mines. So we're pretty excited about some of those holes, and really a lot of our resource is going to come out of this new area that sits in between these two, between the two historic mines. In retrospect, if we hadn't been worried about risk, we probably would have drilled a lot there earlier on, but we went for a very low risk approach to be able to hit where we knew the veins were. So we didn't have as well-defined targets in this area. But it's actually turned out really well. So we're super happy with how that's come out.
And the intention is to include these new results in the updated resource?
Yes, we'll have all of these in the updated resource. We have a core number of veins. And back in May, we put out where we drilled on those veins, about 11 or so veins. And we're looking how many more we can actually add into the resource coming up. We're in this modelling process now, and look, I can share the screen here, Deborah, and just talk to everyone about, what the process is and where we're looking to put the resource out. So we're actually finishing this first step here, which is receiving the final results. I think we've probably got about 500 or 600 left at the lab. They'll be coming through very soon. The next step in is just to update the vein volume. So this is what our modelling team does. They basically take the drill hole intercepts and they pull out the wireframes that are the volumes around the veins. That's not a new process. Our team's been underway doing this right from the beginning. And a lot of these veins have got a large number of pierce points in them. So basically when new holes come in, they just include these new holes. And then the next step on that is Leonardo, our VP of resource. He recalculates the resource. That takes about 3 days for him to run through that process. And then we send it off to InnovoExplo. They're our external QPs, and they sign off on that. And then finally, the next stage is that we actually put the resource out. And then there's a 45-day window to publish the 43-101, which is the big document that comes with the resource. So everybody's probably curious about what the time frame of this is. From this final receipts, it's probably about a week or two to update those volumes, about a week to calculate the resource, and then about a week or so for the QP to sign off. And assuming the QP is happy with the distance of our pierce points for the resource categories that we're aiming for, then we'll go through for a resource statement. So we're looking in the range of about 4 to 6 weeks to have that resource completed. And we expect that the 43-101 will actually come out pretty quickly after that. We're pretty well finished all of the writing of the 43-101. The only component that still needs to be included is the resource statement itself. And that's, of course, dependent on the sign-off of the QP.
And I think in one of your latest releases, you referenced having 620 samples still at the lab. How many meters of drilling or how many drill holes are reflected in those samples?
Unfortunately, don't know that off the top of my head. I'd expect that that's probably about 10 holes that are remaining at the lab. Some of those are also historic drill holes that we've identified and sent back to the lab for assay as well. So it isn't a large number of holes, and it's probably, I guess, one more press release, and then we'll add those into those resource models.
Okay. And are you anticipating any changes to the number of resource veins compared to the 11 guided for in the May 2nd press release?
Yeah, so I don't know how many extra will come in, but there certainly will be extra ones. Some are what are called the crossover veins, which are veins that link the main very long veins together. Our drill intercept angle has been oriented to include some of these veins, and they're generally shorter in strike length, but very fat and often very high grade veins. So the modelling team's working on some of those. We didn't have them ready back in May, but they'll, I think, make it into this first iteration of the resource coming up.
Okay. And you previously guided to, I believe, 1.5 million to 2 million ounces target for the maiden resource. Is this still your goal? Do you expect to exceed it?
Yeah, so our range was looking at 1.5 to 2 million ounces, and our grade range, we were looking at sort of a 7 to 9 gram per tonne range. With inflationary impacts, I think everybody in the industry has seen a real 25 to 30% increase in costs. We weren't able to complete the number of meters that we wanted to drill, and we were really targeting to exceed those total number of ounces. So we're probably not going to exceed that 2 million ounces, but what we will exceed is the grade. What we're certainly anticipating is that grade is really going to be king, and with increased cost, and we've seen a lot of very famous cases of production companies really have to jack up their all-in sustaining costs. We've seen anywhere from 30 to 50% increases that's based on inflation, but also based on this extra fuel cost that's really pushing these inflationary figures up. So luckily at Bralorne, we've got a lot of flexibility with how we model these veins and how much of the halos or the envelopes, mineralized envelopes around the veins that we include. And initially we're including quite a bit of that halo material, but what we've done is tightened up those veins. So we come up with a smaller resource within our range, but a smaller resource that's probably a much higher grade, so has much better economics. And we think that's much more important at the moment than having a big resource that, we've seen the gold come off $150 to $2 an ounce. So what we believe is very important to keep that grade up. So we're looking like having a higher grade, but smaller total ounces, a lot more economics, and really it's probably going to come out to be one of the highest grade deposits that's come out in Canada for quite some time.
Well, grade's king. Are you still expecting the resource to be 100% in the inferred category?
No, we'll have some components of the resource that are in M&I category. We won't have an external economic study here that'll push that into proven and probable, but there will be some of it that has the drill spacing in the future to become proven and probable. We have a sort of feel that it'll be 100 to 200,000 ounces that'll probably be at indicated, and around probably a 9 or 9.5 gram is sort of what we're anticipating at this stage. All of this may change, and we've still got some more drill results to come in these areas, but we have that drill spacing there to be able to push that into the higher category. So that'll be in addition to our inferred range that we're heading for.
Okay, and you discussed having less meters drilled going into the resource. Can you estimate how many meters of drilling will now be incorporated?
Yeah, we'll have about 140,000 metres of new drilling. So that's drilling that we've done within the last 2 years. But we've also been able to validate a lot of historic drilling as well. So identify the assay certificates, identify all the survey materials, locate these very well on surface. So I think there's about 150,000 metres that'll come from that historic drilling. There's about 250,000 metres of historic drilling, but about 100,000 of that is basically non-compliant, where we don't have assay certificates, we don't have good locational control. So we can't use that coming up to the resource. But the team's done an excellent job being able to identify, capture this data and be able to present that to our external QP, so we can validate all that and bring that into the resource. And some of the components that we'll have that'll be at categories higher than inferred, so M&I categories, will be based on a lot of this historic validated data that we'll see.
Okay, and you referenced having some more drill results coming. Maybe you can talk a little bit about the news flow between now and the expected resource.
Yeah, there won't be a large amount of drill holes, basically because we're just waiting on these final drill results to come in. We've reduced our drilling right back to no rigs at Bralorne until we get this resource out, which is imminently coming out. So it's just these final results that will be coming in. There might be another 1 or 2 results, depending on the timing that they come in. But then we'd really be just hitting that resource.
Okay, and then moving beyond the resource, maybe you can tell us a little bit about your drill plans for after the resource. Are you looking to upgrade or grow? What are your plans at Bralorne?
Yeah, we'll have a look here. Firstly, Deborah, where the current resource is at the moment, and what we're looking at here is a long section through the deposit. This is about 5 kilometres. Just remind everybody of the scale of Bralorne. It's quite a large-scale deposit. The colours that you see are each of all the individual vein panels that we've been drilling off, and most of our focus has been down to about 700 metres of where we've been drilling. The vast bulk of our resources sitting here in between the 2 historic mines of Bralorne, which is this grey area, and Pioneer that sits over here. Another main component of it sits here in the gap between Bralorne and the King mine that sits over here. We've got about 10% of our deposit or so that are in remnant areas. So these are areas that are adjacent to historic stopes. About 20 or so % is a long strike from where the historic mines were, and about 70% is in brand new areas. So this is almost a brand new deposit that we've been able to define. And so far, we've just been targeting down here to about 750 metres. We had planned in this phase before Russia invaded Ukraine and fuel prices went up and markets crashed to continue our drilling for this current resource and add about another 15 to 18,000 metres. And there, these drill holes in the green that you can see. So we've already planned all these drill holes, and these basically extend the resource up. And we initially hoped to be able to drill off about another 800,000 or 900,000 ounces in zones that were above or heading close to surface or along strike from the existing veins. So we already have this planned, and we already have all of this modelled out in numerous veins. So really, that would be our plan. It's only a small amount of drilling, but it adds a lot of ounces because they're basically along strike and above where the historic veins are. So it's not a large cost for us, but it can effectively add a large increase to our resource. And you can see this on numerous number of veins where it's basic extensions of the known veins where they are. So really that would be what our plan is here, that we increase some of these up and really grow these veins a great deal. You have a look here, it almost doubles the size of this vein, the 77 vein, which is we've got defined for almost 2 kilometres, very close to surface pierce points. So there's a lot of benefit in drilling this, and it's not a lot of metres. We would have liked to be able to drill these metres prior to the resource and come out beyond that 2 million ounce mark. But really, that'd be our next steps, to grow this to beyond that 2 million ounces, heading towards 3 million ounces with a relatively small amount of drilling.
Okay, makes sense. And shifting gears towards potential production, can you speak to the potential routes that would put Bralorne back into production and what you're considering there?
Yeah, look, it's relatively simple at a small scale. We're permitted now for about 100 tonne a day from the historic, from the previous owner. We're in the process of upgrading that to 1,500 tonne a day. I wouldn't expect that we'd rocket straight into 1,500 tonne a day. We'd look to stage that in across time. With the difficult market conditions that we're looking at and difficulty in accessing capital for junior exploration companies, it can provide a very good cash flow scenario for us to be able to continue to grow our resource. So we're seriously having a look at that. Initially, we'd look at attacking the area in the BK zone that sits between the King and the Bralorne mines. That's where most likely we'll have this 100 to 200,000 ounces of M&I category. So it's pretty well classified, ready to mine. We're looking at various off-site processing scenarios. So there's a couple of toll mills within driving distance from Bralorne. So that would allow us to accelerate any pathway into production without having to put down a lot of CapEx to build a mill. We'd basically look at a relatively cheap scenario where we had a primary crusher, a secondary crusher, and we'd be able to produce that ore and truck it off-site with either a toll milling or an ore sale agreement. So it's something we could go to relatively quickly. It would take some time to upgrade the permit to 1,500 tonne a day, and we'd look to stage that production growth profile basically over the next year to get to 1,000 tonnes a day or beyond 1,000 tonnes a day. And we look at areas where we had good access, but probably areas that were away from the historic mines, just so we could have a very simplistic production method on multiple levels with multiple access points. So really that's what we'd look at. Looking at a longer term solution, I think Bralorne can certainly sustain its own mill, its own processing plant. But at this stage, I think that's not something that we'd really look at. We'd look at off-site processing to avoid that large capital expenditure upfront.
Okay. And in terms of toll milling, do you require any additional permits or consultations to be able to truck ore?
On our side, no, we don't. On the receivers, then they'd have to look at that on their side. But certainly on our side, no, there's no additional thing we need to do because we'd be processing it externally.
Okay. And what sort of timeline do you think that would take to be able to start toll milling?
It all depends on the timeline for the mill facility to be able to accept our ore. We're looking at ore characterization studies now to be able to run them through the processes that are in line in these processing facilities. So we're actually quite advanced on that, and we're working with their teams to be able to characterize that ore and see how it fits in with their final products that they sell. So that's really the first step that we're looking at. From our side, we would need to inform Department of Mines that we're looking to initiate production and also talk to our community members and our First Nation partners that we're looking at initiating that. And then to be able to increase to a larger scale production, then we have to update the mine plan that's currently in place. And that would probably take a month or 2 months to be able to get that done and then sent into the government.
Would you intend to still go through the steps of a PEA, a PFS, et cetera?
Of course, we always look at internal scoping studies. Whether we go to the expense of doing our own PEA to be able to release to market, that's something that we haven't made a decision on yet. I'd probably prefer to incorporate that with a resource increase. So basically drill off this other 15 to 18,000 metres, add another, hopefully, 1 million ounces, and then build a much more robust project there, high grade, lots of ounces.
Okay. And then switching gears a little bit to your other projects, do you expect to do any drilling on Ladner, Golden Hornet, Spences Bridge?
No, look, Deborah, really we're focusing all our capital and our focus onto Bralorne. I think everyone listening and all our shareholders understand very well how difficult current market conditions are. And we want to be very prudent with our capital expenditure. We don't want to rush out and drill something that the market clearly won't give us any value for. So all of these projects, aside from Bralorne, are fairly well parked at this stage. And we're not looking at any sort of advancement on those until market conditions turn around and there's actually some value in being able to take those projects forward. So it's just focus on Bralorne at this stage.
And with the current low valuation of pre-production companies in the mining space, are you looking to add to your portfolio at this time or just still focus really on Bralorne?
Well, we are focused on Bralorne, but we've always got our eye open for undervalued projects that could add accretive value. There seems to be some sentiment in the market that bigger is better, that growing the companies and acquiring assets can add scale to projects. So it's always something that we're cognizant of. We're reviewing projects all the time. We get a lot of submittals come in, and really up to this stage, we've done about 14 acquisitions as we've grown Talisker. The two big ones there are, of course, Bralorne and Ladner. So we always have our mind open to that to see if the deals are accretive for our shareholders. So we certainly keep an open mind to that.
Okay, and I think I've got an audience question for you. Do you plan to provide more details on halo mineralization and grade optionality with the resource release, i.e. sensitivity to cutoff grade?
Yeah, so we're actually modeling another scenario, particularly in the Pioneer area, where we've had some of those significant or long intercepts with this more bulk style of mineralization. And it's mainly focused there at Pioneer. We won't be doing much of that at Bralorne and King. But we're looking at modelling some of that with a larger stope width. So we're talking up to 4 or 5 metre wide stopes. Most of the drilling we did there was relatively close to surface. And unfortunately, with the reduction of the overall drill program, we didn't get to extend that as much as we would have liked. But we're just having a look now to see how much of that has enough pierce points to make it into the resource. We see an average grade there around about the 4 gram mark. We're using a 2 gram cutoff. And the key thing here is the bulk potential, to be able to mine this at a large scale. The average width that we see there is about 7 metres, and we see it in some cases up to about 20 or so metres around the veins. So there's a great deal of optionality there. Of course, we've only really understood that bulk tonnage style of mineralisation, that vein halo style, for the last year or so. And our main focus has been on the high-grade veins, getting that high-grade vein resource out. But really, I believe that the future of Bralorne, scale-wise, is in understanding and modelling this more bulk material. It means we can mine a lot more material, a lot more effectively, a lot more economically at a lower grade, and take a lot more ounces out of there. And the key to that really is that Pioneer area. It's hosted in the granite down there. The granite's a lot more rheologically robust. It fractures a lot better than the other materials. So we see these really big halos getting developed. On the veins that we see up at King and Pioneer, we have King and Bralorne, I'm sorry. We have a very dynamic modelling process, and we look at various widths and seeing how can we maximise the grade and the ounces with those widths. So we look at sensitivity for each of the veins. So we treat each of the veins as their own individual ore bodies, and we go, well, what's actually the best width to mine that vein? Is it super narrow? Is it quite wide? So we have a lot of flexibility there, and our long-suffering modelling team has to model these veins at various widths to see if we can maximize the grade and total ounces that we get out of each of the veins. So really, in summary, that's what we do. We treat each of these veins as a separate ore body, and we do various iterations of the modeling so we can squeeze the most out of this deposit.
Okay, and I had another audience question, which is, if you drill another 15,000 meters for 1 million ounce increase, is that $6 to $7 a discovery ounce, assuming around $400 a meter all in drill costs?
That's pretty good math, whoever figured that out. But yeah, it's around about that. You know, these are all pretty close to surface. These holes that we want to drill, most of them are above or a long strike, so up plunge or a long strike from the existing veins. So we understand the ore shoots and the grade distribution very well. So that's why we're able to add the ounces very cheap. And really that's why we wanted to do it prior to this resource. So that unfortunately, because of market conditions and the massive exploration inflation that we've seen, we were unable to do it, but it gives a very good option to be able to increase that. So yeah, very good math, whoever that was that calculated that's out. That's certainly what we're looking at. And we think it's a very good business case for our shareholders and for our company.
Okay, great. Well, I don't see any other questions and I don't have any questions left. Is there anything that you wanted to talk about today that we didn't touch on, Terry?
No, just for everybody, hold on. I know there's the very difficult market conditions. I know a lot of people have been in our stock for some time and are quite disheartened, as I am, with the way the whole market's been and the way our share price has suffered, similar to a lot of other groups. All as I can say is that we've got one of the great resources to come out very soon here. And it's been a long road, but we've actually done a lot in the last 2 years since we've had Bralorne. We've drilled a lot. We've made it through floods, through fires, through the pandemic, and through the market crash. And despite all of that, and I should include rocketing fuel prices, we're actually going to come out with one of the best, highest grade resources to come out in Canada for quite some time. So please have faith. We're very close. We're almost there. And it looking like a great resource. And I think all of our shareholders will be very happy with the outcome.
Yeah, we're looking forward to that update, and hopefully September is a little bit of a better month to go marketing on the back of an updated resource. Well, thanks, Terry. I don't have any further questions, so I think we can end the session there. Appreciate everyone's time. If you have any further questions, feel free to reach out. If you'd like a meeting or a call with Terry, just let me know. Have a great July, Terry.
Thanks very much, Deborah. Talk to you soon.